Hello everybody. Today we will discuss about some accounting terms which every function consultant should know. There's many functional consultant we are not from accounting background, so this video for them. So first of all, whenever we create chart of account, uh, many times client ask us the verification or ask us the particular GL category. So there are mainly three categories are of chart of account: assets, liabilities, capital, revenue, and expenses. So just learn that assets, liability, and capital is the part of balance sheet, and revenue and expense is the part of income statement. And assets means anything which have a life of more than 1 year, and we can convert into cash. So it's all are assets like my land, building, vehicle, cash in my hand, cash in my bank, or any customer, or if I uh, give loan to anybody. So मुझे उससे 10 लाख रुपए लेने हैं, मीन्स उन 10 लाख में मेरा हक है, वो मेरा एसेट्स है. Apart of this, machinery, furniture, my goodwill, my copyright, my stock, my investment, all are my assets. And then the liability. Liabilities means जो भी मेरा किसी चीज के लिए ड्यू हो रहा है. Means I uh, took some loan from the bank and now is due to pay. I have to pay EMI for that. मुझे अपना रेंट पे करना है, वो ड्यू हो गया, तो मेरे सारे लाइबिलिटीज हैं कि मुझे किसी को पैसा देना है. ठीक है, मेरे वेंडर जिनसे मैंने परचेज करा है, मैंने क्रेडिट में उनसे परचेज करा था, नाउ आई हैव टू पे फॉर देम. दीज ऑल आर लाइबिलिटीज. Income for which I am doing business, from where I am generating my revenue. So all are income. It can be commission income or interest from bank or my shares, or if I give some consultancy income from there, and royalty, sales, all these things are income. And fourth one is my expense. So when I uh, give the salary, so it's a salary expense, देन सम रेंटल एक्सपेंस, ट्रैवल एक्सपेंस, जो भी मेरे खर्चे, जैसे भी खर्चे मैं कहीं भी करूंगा, अपने ऑफिस में, एम्प्लॉय में, ट्रैवलिंग में, ऑल आर माय एक्सपेंसेस. एंड फिफ्थ वन इज कैपिटल विच इज बिलोंग्स टू ऑनर. ओके, मीन्स कंपनी ऑनर, ऑल आर कैपिटल. सो वी जस्ट remember four thing: assets, liabilities, revenue, and expense. Okay, and fifth one is capital. And now there is some debit and credit rule according to these categories. Basically, you can learn the debit credit rule from here or from three golden rules. So just learn two things like uh, golden rule for accounting. Three rules are there, or from account category. So whenever an asset increase or expense increase is debited, but when liability, equity, and revenue increase, it's credited. So remember these things. And accounting rules are: debit what's coming and receiver. Either this is receiver, then it will debit, or if it comes, so it's debit. And what goes out, credit, and giver is credit. So not do not go for these three terms: a real, personal, nominal account. Just learn respective rules. Okay, debit expense and losses, and credit income and gain. And you can easily identify that it's income or gain or loss or expenses. Okay, so now we go for the business center. So we understand in term of business center and any other ERP. So whenever we do some purchase, so basically in ERP software we purchase on credit. Even we settle the account immediately, but ERP system or basically business center create two entry, first for invoicing and another one is payment. So whenever we post the invoice, two parts is there for inventory and vendor. So for inventory you can check like that inventory increase, so it's debited, and another account is direct cost supply account which credited. Or you can check the inventory, it's my assets, and we learned previously when asset increase is debited. Same term vendor, actually vendor is a giver, so giver credited. Or from here vendor is our expense. Currently our liability as we purchase and now is due to pay. Okay, so vendor credit, TDS credit, purchase account, any discount is there, the credit, and purchase account will be debit. So you just categorize these all and use this term. So most of the time you identify one account and respective account with the opposite sign. Like in this scenario, you just remember the giver is credit. So vendor credit. So another account against vendor payable is purchase account. So it will be debit. Or you can learn all the categories. Same in the sales part. In sales part, customer is receiver, so it's debited, and customer is our assets, as we learned earlier. So when asset increase is debited. Okay. Or you can learn in other way also, that whenever anything increase is debited and decrease is credited. So here inventory decrease when we sell, so it's credited, and other account is debit. Okay. So in business center, any other ERP, if you learn these two rules, it will work for you also. Debit what comes, credit what goes, debit the receiver, credit the giver. Okay. So you can create the journal entries with this. So as well as in production, whenever we book the consumption journal, means our inventory goes out or consume or decrease. Okay. So our raw material decrease, it will be credited, and WIP account will debit. In the same way, when we create output journal, so our inventory increase means debit and WIP account is credit. And for more understanding, we just go through a salary transaction also. So all the salary as we learned earlier, it my expense. Okay, salary account and our liability also. So whenever we book salary, so it will be our expense, another account will be liability. So our salary is due. So basically our these expense increase. Basic salary, HRA, all the salary part uh, which we have to give to employee, and all other liability parts means which is dues will be credit. Any deduction it will be credit. So PF payable employee, PF payable employer, and ESI payable ESI employer, payable employer, and TDS payable means all the deduction from the salary it will be credit, and all other component will debit. So and when you pay the salary, then salary payable will be debit with bank account, and PF payable will be debited with bank account. So that time all liability becomes zero. I already booked the expense, and when we pay the salary, all liability becomes zero. Okay, so you can learn like this. And one more thing, when we some entry created when expected cost post to GL boolean true, then one more entry created when we post the uh, good receipt or shipment. So it's accrual account basically. So whenever we post good receipt note, uh, then you have to learn. I uh, did not create slide for that, but at the time inventory accrual account entry will be debit, and inventory account entry will credit, and it update the expected cost at that time. Okay, thanks for today. If there is any confusion or you need some clarification, so you just comment me for more detail. Thanks.